The GST Council is likely to meet this week in a special meeting to take a call on the borrowing options given by the centre to meet the compensation cap of states. The government last month had given states two options for borrowing the shortfall in GST compensation. One involved raising 97,000 crore rupees excluding the impact of COVID-19 on GST revenues through a special window by the RBI, the principal and interest for which would be paid and repaid by extending the GST compensation cess beyond 5 years. Now, if states go for option 1 and borrow 97,000 crore rupees, it does not mean that they will have to forego the remaining compensation. The remaining compensation will be paid to states after the above borrowing has been fully repaid. The second involved borrowing the entire 2.35 lakh crore rupees, including the impact of COVID-19 on GST revenues from the market, but states would have to service the interest on this debt. The centre is likely to convince the states to choose the option 1 as borrowing for meeting the entire shortfall at a time when the private sector is struggling to get back on its feet could hurt them badly. The Finance Ministry has also ruled out borrowing by the centre as suggested by some states, with sources saying that under the GST law, the compensation cess is a tax owned by the states and under Article 292 of the Constitution. The centre can borrow on the security of its own taxes and resources, which is the Consolidated Fund of India. It cannot borrow against the tax which it does not own, as per media reports which have quoted ministry officials. The government's position has reportedly been clarified at a meeting of states' finance secretaries held last week. Also, any borrowing by the central government would crowd out borrowings by the private sector and would make borrowings costly for entrepreneurs. If the centre borrows, it would have a higher impact on the market and push the government security rate, which becomes the benchmark rate for other borrowings, including borrowing by the state governments. The deciding factor would thus be whose borrowings will have the least impact on the market rates. Borrowing by states will also eventually help the government get room to raise funds in the event of hostilities with China escalating and allowing it to provide a stimulus to aid the COVID-19 hit economy. Government officials have indicated that the shortfall in compensation to states, whether on account of GST implementation or COVID-19 pandemic, would be compensated. The government will honor these commitments in letter and in spirit.
It is rare to get information that is tailor-made for you. In this era of clutter, Money Control, India's #1 financial destination, has launched Money Control Pro, an ad-free premium service that offers you subscribers curated markets data, exclusive trading recommendations, and actionable investment ideas, which help you stay on top of your game. In less than a year, Money Control Pro has become India's fastest growing subscription service, with more than 1.2 lakh active subscribers and growing by the minute. We are grateful to all our loyal users for making Money Control Pro an undisputed leader in its category, with several corporate giants subscribing in large numbers for their employees. Subscribe today for a seamless, uninterrupted access to a gamut of business and financial information. Be a pro with Money Control Pro.